If you're a sole trader, knowing what to claim is key to optimizing your tax return. In today's video, I'm going to be going through all things sole trader tax expenses. So first you need to know what is a business expense, what is tax deductible. And the ATO have a few things on their website to help. So they say the day-to-day operating expenses of a business, purchases of products or services for your business, and certain capital expenses such as the cost of depreciation in assets like machinery and equipment used within your business. Now, if you ticked off those things, we then need to make sure it meets the 3 golden rules that the ATO have. And they are that the expense must have been for your business, available as an allowable deduction and not for private use. If the expense is a mix of business and private use, you only claim the portion that's used for your business, and you must have records to prove it. So if you can make sure it's one of those 3 categories we talked about to start with, and it meets the 3 golden rules, then it is going to be tax deductible. Now, what is actually tax deductible is going to differ greatly from business to business and by industry. And that's because no 2 businesses are alike, and especially no 2 industries are alike. They're all going to have their own sets of normal tax deductions that people are going to be claiming, and then it's going to be optimized based on that particular business. So let's dive deeper into those 3 categories the ATO mentioned. So let's first look at day-to-day expenses of a business. And these are going to be the day-to-day operation expenses that you have to run your business. This could be subscriptions to software, your phone, your internet. Maybe it's the rent that you pay for your building. Maybe you've got utility costs. Maybe it's tools. The list goes on, and it's going to differ again depending on your particular business. You could have things like wages. So you might have the wage cost and then also the superannuation cost to your employees. Maybe you've got work cover costs, or maybe you're paying payroll tax. All of these things are again going to be tax deductible for your business. You really need to understand your business type and understand what are the common expenses used within that business, and does it meet those 3 golden rules that we talked about initially? Are you spending this money to run your business, and does it have a personal or a private use component to it? If it does, you need to apportion that expense between what is business related and what is personal related. So maybe you're using your mobile phone for business, and 50% of the time you're using it within your small business, and the other 50% of the time it's being used for private purposes. So you need to apportion that expense 50-50 based on the usage for your business. The same applies to any other expenses within your business. Now, there'll definitely be plenty of expenses within a business that's being used 100% for business purposes, and you can definitely go and claim that full amount. Now, when you claim them is going to depend if you're on a cash or accruals basis. A bit too complex topic for this video, but make sure you're aware of that. Now, before I talk about the next part of this video, I'd love for you to hit that subscribe button. I've got the goal of getting to 10,000 subscribers here on YouTube. We're over 4,000, but the year is quickly running out. So I'd love for you to hit that subscribe button if you're looking for more tips on how you can better optimize your small business for tax purposes. Let's get back into the video. The next category the ATO talked about is purchases of products or services for your business. So what I'm going to talk about here in particular is the cost of goods sold for your business. So when you sell goods or services, you may have a cost that directly applies to that. So for instance, if you're a retail store, the cost of your inventory is going to fit into this category. You buy products and you sell them. So for instance, if you sell a table for $100, but that table cost you $30 initially, your profit is going to be $70 because you can claim that $30 as a tax deduction when it is sold. It is a bit of a complex topic for those that are buying products and then reselling them. I've got a full video on this topic talking about tracking this and how it works from a tax point of view. We then have other industries that are going to be commonly buying products that are used as part of their service and potentially also selling them. So let's look at a hairdresser, and maybe they're buying some hair dyes to use on their clients. So this is a cost of the sale. They're using these products directly to be able to produce the service. So they're definitely tax deductible. It could get complex for a hairdresser because maybe they're also selling some products. Maybe they've got some wax that they on-sell to customers. So they've got that bit of blend of using products within the service and also selling those products directly to customers. So they really want to make sure their tracking is correct because they want to make sure they're claiming everything they're entitled to claim. And then we've got industries such as trade. So maybe you're a tradie and you hire subcontractors to help you complete jobs. Those subcontractors are definitely going to be tax deductible as well because you need them to run your business. You need them to be able to get paid for the jobs that you've invoiced out. And then the final category the ATO mentioned was capital expenses. So this is when you're buying equipment for your business. And this is normally going to be stuff that doesn't fit into that day-to-day operations. They're not really ongoing expenses. They're more once-off expenses. Now, traditionally, a lot of these are going to be anything over $1,000. But the deductibility is going to depend on which year you're looking at because these rules have changed a lot recently. I've done a full video talking about the instant asset write-off changes, so go and check that one out. But pretty much for a small business going from 1st of July 2023, anything under $20,000 will be able to be instantly written off. Anything over that will be depreciated over a number of years, depending on the effective life of that particular asset. There's this website here called depreciation rates where you can go in and you can search up what your asset is to see what the rate would be. It's a good guidance to give you a bit of an idea of how long is it going to take to completely claim this product. Now, a really common one that happens in this area is cars. Again, it is something I've covered in a full topic talking about purchasing a car for your business, so go and check that out. But this is quite often one that will have a private and a business portion to it. So like we talked about earlier with any other expenses, you do still need to claim only the business portion of capital expenses. So if it falls under the instant write-off, you're only going to claim the instant write-off for the business portion percentage. And the same goes if it's the depreciation owner. You're going to only claim the percentage of depreciation that is for the business purposes of that asset. So if it's an asset that is being used within your business, it is going to be claimable. Just remember that it's going to depend on how much you paid for it as to how quickly you can claim for it, and how much of it you can claim is going to depend on what is the business portion of that asset. Now, even if you don't pay for your asset in full, and such as you're getting a loan for it, you may still be able to claim the full amount in the year of purchase. And this is because if we go and buy something for $10,000, but we get a loan attached to that, we've still got the invoice and we've still purchased that asset at that time. We're now just paying back another debt. But the ATO deemed that deduction as happening at the time of purchase. So if that falls under the instant asset write-off, we have the $10,000 deduction then, even though we haven't actually paid for it in full. Now, this may depending on your business and how you are set up. So make sure you do your own research into this area. And really, any of the stuff I've talked about with assets, you really want to go and speak to your accountant or speak to the ATO directly to find out how it would apply to your particular circumstances. Now, since you've watched this far, I'm assuming you run a small business. So this upcoming playlist is probably for you because it's all about small business tax tips and how you can get more out of your small business when it comes to tax. I'd love for you to go and check it out.